All right, welcome everyone to another This Week in Crypto. I'm your host, Brian. I'll be going solo today, no Maxim today, but we've got a lot to cover. It's been a FUD-ridden previous week here as we head into the weekend here in the second half of May 2023. I'm getting a tiny bit of feedback, just FYI, Gary. I'm not sure why. Uh, okay, no worries. So as I was mentioning, we are in a bit of a situation where the traders are not in strong belief that crypto will be recovering back to 30K or beyond. It looks like there's more and more of an impression from people that we are heading downward back to the 25 or lower range. Obviously, we were in that 20 to 25 region here in late February, uh, early March, even. And then we, of course, went blast off up to above 30K, fell just short of 31, and are now back in the low 27s as of now. But yesterday, 24 hours ago or so, we were in the mid to high 26Ks, and it was really starting to look like 25K could be a reasonable expectation once again. That, of course, hasn't happened, at least not yet. Possible it can, but I think these key thresholds, the support levels, call just psychological support levels every $1,000 here. 26K is a psychological support, 27K, 28K, 29K, 25, etc. Anytime one of them is breached, especially when they haven't been breached for over a week, which is more like a month or two in regular, you know, equities trading, it really can change perceptions on a dime, and it's something we have to be aware of. Uh, we've seen time and time again in both directions. People overreact to when we see a major breach in either direction. So, like when we see 30K, for example, a breach to the high side for the first time in 9 months or so, as we saw back in mid-April, uh, that caused a lot of people to FOMO and get very excited. And we saw plenty of obvious statistics showing that people were, starting to long a little too much. There was weighted sentiment spikes going on, very high profit transactions versus loss transactions. And we'll get into a lot of that now and show why it's kind of happening in the opposite direction as to what we saw in April. So, looking at the stats here for the previous week or so, we can see that this is just our social volume. So, Bitcoin and Ethereum have actually been discussed less and less, while stable coins here, you can see the various iterations of Tether and USDC, they're being discussed more and more. You can see Binance Coin being discussed less, XRP less, Cardano, Doge. Most assets are just having less and less discussion rate at the moment, um, while the stable coins are the ones being discussed more. And we can look actually and see that it appears that a lot of the discussion rates are heading toward hardware and security, and um, maybe not shown here on this top 10, but profit taking and how, getting your crypto into dollars because people expect that we're going to be suppressed again for a little while. These are all signs of FUD. We saw these same kinds of hashtags, maybe not this extreme, but tons of keywords related to security and hardware and cold wallets back in November when, if you guys remember, the FTX collapse happened and everyone was suddenly having very serious discussions about how to keep their crypto most secure. This is, of course, a responsible discussion, and it's a good thing that the crypto community is thinking about it. But really, you don't see these kinds of discussions happening when everyone is euphoric about crypto. When everyone is excited and bullish, you're seeing keywords about Doge or Shiba or Pepe or words like Moon. or Lambo, even if it's sarcastic. The point is, these are fear words when you're talking about seed phrases and trezors and ledgers and firmware. And yes, there have been hacks and breaches of secure information recently that has caused people to be a bit concerned. Um, but that's the same kind of concern we saw in November. And for those who don't remember what happened in November, unintentional rhyme there. Let's go back just a little, like 7 months ago is when the bottom really hit. So yeah, this is what I'm talking about when we were getting tons of FUD, and understandably so. One of the largest exchanges in the world suddenly went bankrupt, and tons of people lost money, which was a horrible situation. Uh, this was essentially the bottom. Yeah, it took maybe a month, even month and a half to finally get out of it, but at least you can say right around here you weren't really losing money anymore. This was where the bottom happened, and everyone was talking about trezors and security and hardware, etc. So yeah, history does tend to repeat itself. There's certainly no guarantee that we're seeing another bottom right now, just because everyone is talking about security and stable coins once again. But it does increase the probability of prices stopping the bleeding soon, because in most cases that has been what has happened when everyone is getting fearful. So you can see we talked about it here. We highlighted it about 8 hours ago, exactly what I just talked about. You can also see here the Bitcoin social dominance has risen back up once again. Another sign of fear. Generally speaking, when people are very confident in the crypto markets, they don't want to be in Bitcoin. They actually want to be in altcoins because altcoins historically go up faster than Bitcoin, at least for short periods of time when the markets are moving up. They're kind of like leveraged versions of Bitcoin a bit. And when crypto is struggling, you don't want to be in altcoins because they bleed way heavier. Most of us know this who've been in trading for a while, but it's something we need to be reminded of from time to time. That when people are discussing Bitcoin, it's usually because they aren't really believers in the Pepe's and even Cardano, Link, whatever other top cap market cap altcoins traders typically get into. They're not so much interested in those at the moment. They're interested in Bitcoin. Uh, Definitely, I've seen increased discussions about whether we are going back below 25K. The halving being less than a year away now, we're kind of getting close to the 11-month until halving mark. And this is generally a good thing. It's not a perfect correlation by any means, but you can see when social dominance first jumped into the what we deem the healthy market focus zone, that's when prices began to really take off. And throughout this stretch of healthy market focus, it's looked pretty good. Yeah, we've had corrections, but overall, it's been a nice stretch while it's been in this green zone. And then the red zone's been more of a mixed bag. We were really suppressed, then we bounced, then we had a big correction, and then we had this huge run in mid-March that really shocked a lot of people. So you can see, I mean, very polarized opinions going on. We're going up, shorters beware. 10K is imminent. So, I mean, we see a little bit of both going on anytime we post about this kind of stuff right now. And the commentary is out in full force right now, folks, which it's a good thing. It's good that people are becoming very polarized. This is typically what we need to see for rallies to begin to happen again. So moving on to some of the key indicators for Bitcoin and the on-chain metrics that we should be taking a look at. Let's look at just the last 6 months for the volume statistics for Bitcoin right now. And we are seeing that trading volume is staying suppressed. Really nothing too exciting happening here. Obviously, if prices are moving down like they have been since mid-April, we wouldn't want to see trading volume moving up. That would be a sign that traders are showing increased interest one way or another, whether they're buying or selling, as prices are dropping down. That's not what's happening. It's kind of just stagnant. People are kind of yawning, going, when is Bitcoin going to go up again? But not buying the dip so much. Meanwhile, transaction volume, rather suppressed. No real spikes. The last big spike happened just before prices moved down. So this was probably a big profit-taking transaction volume spike. I think I remember if I type in top transactions table, I'll just add it to this chart so it populates right below it. And we look at the last month, I believe May 7th was when we had that huge Bitcoin move. Yeah, so this was one of the largest in the last 5 years, actually. 117,351 Bitcoin being moved to a new address. This was in the billions of dollars, folks. Something like 3 billion, if I recall, a little over. So that was a huge one, and I think that's what this last spike had to do with. Unclear. It's impossible to say, hey guys, this spike is why we dropped from 29K down to below 27K temporarily. But yeah, it likely had some contribution to it. We often see a big shift after a huge transaction volume spike. Meanwhile, we can also look at, let me take off social volume here. We'll look at that down below. But if we look at active addresses, we can also see that there has been a drop. We actually reported right around the beginning of the week here, I think it was like the 12th, we were saying that the lack of address activity was a big concern because it was coinciding with the price drop. Utility is generally something very important that is a factor for prices to be able to climb, whether it's the amount of unique addresses interacting on the network or the unique amount of coins being moved on the network. That's what token circulation is, which we'll get to in a moment. The active addresses, we're seeing quite a dip, and they have recovered a bit. You can see here, this is kind of the 30-hour smooth moving line for each hour of address activity, and it's starting to climb a little bit. I can even add a longer indicator just to see a smooth moving average. And yeah, I mean, the 200-hour one is still declining here. It's got a little more of a lag to it, obviously, than a 30-day one. But, long story short, this blue line representing 200 hours at a time is moving down, and that's not ideal. We'd like to see that begin to step up, and it might take like one final plummet for address activities to start to rise as people react and become interested in either the opportunity that Bitcoin is presenting itself at a lower price they've been waiting for, or it's a lot of people panic selling and overreacting to the drop and saying, all right, it's back below 25K. I said if this happened, I would just jump out of crypto and take my profits that I have from when I bought in at 18,733, whatever it is. That's what causes address activity to start to rise again. And right now, it's almost like people have a mixture of boredom and a mixture of fear happening. So as mentioned, let's take a look at token circulation to see if there's any improvement. And it doesn't appear to be. This is the 10th straight month that we're seeing a bearish divergence in the price versus the the price versus the actual market cap. The price versus the amount of tokens being moved on the network. So you can see, yes, we've kind of fallen during this red stretch, then risen, and then kind of fallen again. This is kind of typical. We saw the same thing in 2021, where we, put the brakes on right when circulation dried up and got bearish, dropped it back down, but then we're able to recover again. And then it was kind of inconsistent as it turned green again. But typically, red isn't the best. We tend to see slides when there isn't enough unique tokens being moved to justify where the market cap currently is. So keep that in mind. It's not the end of the world. We've seen plenty of price rises happen even when there's a bearish divergence for utility. But all things equal, we would much prefer to see these green zones that are big confidence indicators for crypto's future. And while we're here, Ethereum is looking about the same. Yes, it's shown a bit of a rise throughout this red stretch, um, but all things considered, you want to see something like this because this is when you get those face melting rises that just shock the world. All right, moving back to circulation, address activity. Let's go down to MVRV now. And we are seeing that the 30-day trading returns are still quite low. It's about -4% at the moment. Uh, that is better than average, obviously. We'd like to see MVRV staying below 0% as much as possible because that is an indication that traders are below sea level and unable to generate a profit on average. When they're not generating a profit, it's better news for you because it means that if you're adding onto your position or holding or opening a new position, you are in it at a lower price at a time where traders are in a bit of pain. Now, ideally, we want to see both the short mid MVRV, which is represented by the red 30-day line, be under 0% as the 365 long-term MVRV in yellow is also below, as we saw here from November to January, early January. That is the ideal setup, just as we saw here in the second week of March as well. That's the ideal setup for a big rise. And ever since this rise in March, the long-term traders have been well over 0%, which makes it a little more limited into how much we can rise. Yes, there's plenty of anomalies and exceptions throughout history where prices will still go on a huge run, even with MVRV being up. But beware if the red line also goes above 0%. Maybe we have a minor rally today or through the weekend, and maybe 30-day MVRV gets back above 5%. Those are where you have to be a little careful because you can see that prices tend to top out or at least flatten when they're both well above 0%. Funding rates, we saw the last big anomaly was 2 weeks ago where we saw some major BitMEX shorting going on, and that kind of stopped the bleeding for a minute, and then the shorts went away, and then prices continued falling. Um, we'd ideally like to see more shorts happening, but right now that's just not the case. It's very flat, maybe arguably just slightly long. And when there's a few longs happening without many shorts, it can lead to a bit of a concern where prices are more prone to fall. But if they fall a tiny bit, you can expect in most cases the shorts will start to pop up again as people try to ride the wave down and profit from that. And if shorts happen, they're prone to get liquidated and prices go up again. So right now, not much to report in either direction. Whale transactions, if we have any anomalies here, that would be good, but it doesn't really appear so. We had this minor spike yesterday, but we've seen plenty of those in the past. Yeah, I mean, ideally, if prices are moving down and you suddenly see some big spikes in whale transactions, that would be a clear sign of accumulation, especially if we combine whale transaction count, which isn't doing much now, but if we combine that with we'll look at both. We'll look at the amount of addresses being that are existing in the key tiers. We'll even look at 10 to 100, which is still moving up pretty healthily at the moment. We'll back out to the last year. Yeah, so the amount of addresses, we'll put orange over there so we have it all in the correct order. 10 to 100 Bitcoin, definitely still climbing. 100 to 1,000, they went through this big drop here in April. You can see clearly this was kind of when markets were topping out. They made a bit of a recovery and then they've been dropping again this past week. Not a great sign there. However, the larger whales. Wait, why is this? These are the same tier. I think one is just absolute. No, they're not. My mistake. So yeah, these are like really, really high whales that aren't typically active traders, but we'll keep them up anyways. The yellow line though is the one we really want to look at, and we see that they kind of bottomed out in March, and obviously we had that big rally. Let me add the price to the chart just so we can see the correlation here. Yeah, so the yellow line, you can see how they bottomed out and started accumulating here. And look at how the price, maybe a week delay or so, started to react to what the 1,000 to 10,000 whales are doing. Not a coincidence. And they have been climbing ever since. They're at their highest point right now since mid-February. We're looking at about a 3-month high for the 1,000 to 10,000 traders. Now, that said, look at how much making up it still has to do to get back to where it was last year. There were 2,142 addresses at its high over the past year. Now we're sitting at 1925. So give or take, call that maybe a 10% drop or so. But it is moving back slowly. And like I said, these are mostly exchange addresses, and they're mostly just flat. So not much we can interpret from that either direction. There's only 109 of those in existence. But yeah, it's kind of a mixed bag. I'm a little concerned about the red line, the 100 to 1,000. These are definitely like the main group of whales, all millionaire addresses, and they tend to correlate pretty heavily to what's going on in the markets. So let's look now, since we looked at the amount of addresses, we can actually look a little more detailed at the percentage held by each of these tiers. So let's add the price once again. So now we're looking at the percentage of the overall supply of Bitcoin held by each of these tiers of sharks and whales, beginning with the smaller sharks holding 10 to 100. They're not, even though the amount of addresses are climbing, they're not really gaining more of an overall percentage of the available Bitcoin. The 100 to 1,000, it's actually looking worse when viewed through the lens of percentage held. They're definitely dropping down right now. The 1,000 to 10,000, just like the amount of addresses, they are indeed growing. So that this is good to see. And then those exchange addresses mostly, they're kind of chopping back and forth. We did see an interesting drop, followed by a bit of a recovery. But yeah, I'd say the two main stories are this and this. The blue is still going down, and the orange is starting to recover. Still not ideal. Still not ideal. We need to see a little more from those two tiers, both going in the same direction. If they start moving up together, that's a nice sign. And while we're talking about whales, I think it's a good time to segue into stable coins as well. Let me take off Bitcoin. You can see right here what we just talked about, and I'll just do the last 6 months for the top 6 stablecoins by market cap, beginning with Tether, which is declining. It's been declining since late April, it seems, and this would be the most important line. We want to see more and more buying power going into these sharks and whales, and that's not really what's happening, at least for Tether. USD coin is looking a little better. It's kind of tapered off in the past week. The percentage held hasn't really changed much at all. Obviously, the big FUD happened in early March where USD coin was in some hot water with the SEC, and there was fear that it could just evaporate as a coin. That obviously hasn't happened. BUSD, it's also gone through its share of FUD, but it has been recovering pretty steadily since mid-March. DAI is the big stablecoin that's been getting accumulated a lot, interestingly. DAI is more associated with Ethereum than it is with Bitcoin, so keep that in mind. It could be a good sign for ETH as we head more and more into the summer here. the fact that DAI is climbing right now. And then the last ones, TUSD, not really getting accumulated at all. It was really dumped heavily from November all the way up until March, and now it's been kind of flat. And USDP, it's still seeing a bit of dropping, maybe not so much in the past week, but at least in early May, you can see it fell back down after it was accumulated heavily at the expense of all the USDC and BUSD FUD. So yeah, overall, no huge signs of stablecoin accumulation right now. We have a total market cap chart that I wanted to look at. Here we go. So this looks at no, that didn't open correctly. I'll try one more time. Stablecoin. Here we go. So this looks at the top 5 stablecoin market caps. So Tether, USD Coin, BUSD, DAI, and TUSD, all combined, looking at their market cap versus the price of Bitcoin. And yeah, it's been dropping very steadily over the past 6 months. Let's zoom out a little. Let's just go back 5 years. Let's go to 2018. And look at this. Look at how the buying power was just going up, 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 all the way up until about 14 months ago, March 2022. And this is where we kind of reversed course. Now we're still way above where we were back in 2021, 3 years ago. So May of 2021, we were at a market cap total of about 86.4 billion. Now we're still at 123.9 billion. So yeah, the slide is relative. We've fallen from the top at 161.8 billion or so, but we're still well above where we were back here. So, you know, we obviously want to be moving up and not down right now with stable coins. That's really important because it's indicating future purchases into Bitcoin, and the less stablecoin market cap goes, the harder it is to justify that another pump is right around the corner. But again, this can be kind of a lagging chart. You can see how, you know, the all-time high had already happened and stablecoin market caps were continuing to go up. And yes, this was partly due to Bitcoin market cap going down and people putting their money in stablecoins. But if you see that, you know, ideally something like this, where you see Bitcoin's market cap going nuts, market cap is essentially going to be tied to price. So if Bitcoin's market cap and price is moving up and stablecoin market cap is moving up too, stablecoin's price isn't going to go up because they're always set to be $1, outside of a few occasional outliers. But you want to see them go up together. That would be a fantastic sign, like we were seeing right here. As things were starting to move up for both, it would be a good sign that there's just more and more money going into crypto in general. All right, let's move back to a few metrics for Bitcoin and a few for Ethereum. Dormant addresses, not really moving too much at all at the moment. It's kind of been a consistent climb outside of this one blip here. So not much we can say about that. Mostly realized profits going on without realized losses. Not ideal. We'd much rather be seeing signs like this, as we saw back in November when bottoms were being formed. Now this one's interesting. The supply and exchanges for Bitcoin has dropped significantly, and the major one happened on May 7th. And that was when we had that huge transaction going on. Ever since then, supply and exchanges is down below 6%, and it hasn't been this low since, I believe, December 2017. Yeah, I mean, somewhere around there, either June, somewhere in the second half of 2017 is the last time we saw supply and exchanges below 6%. And that's significant because the less coins that are on exchanges, the harder to justify another huge sell-off is coming. Yes, there are ways to sell off Bitcoin outside of exchanges, but typically, you know, 95% plus of sell-offs are coming on exchanges, and there are less coins to sell off at the moment, which is a good thing. Social dominance, we already covered that. We're seeing kind of a rebound and very high Bitcoin social dominance at the moment. Zoom back in a little bit. Weighted sentiment, as we said, there is this movement back into FUD territory really since late April, and we kind of saw that maximized here in the past week. This was the lowest weighted sentiment bar we've had since going back to June, the first week of June of last year. Just about a year has passed since we last saw the crowd this negative about Bitcoin. That's very significant, folks. We typically see negativity align with rebounds. Plenty of outliers that have happened in the past year because 2022 especially was a brutal year. But all things equal, the probability does rise of a price rise when we see negativity happening in the markets. Development activity, nothing special going on. It's continuing to fluctuate back and forth for Bitcoin. All right, so that said, let me look at the ratio of transactions in profit versus loss, which I think is a very good leading indicator. So we are seeing that we're in another week right now of loss transactions exceeding profit transactions. Generally good thing. You see a lot of these negative bars happen just as prices are starting to bottom out. It does restrict the probability of future drops when you're already seeing loss transactions happening. And ideally, these are more setups to buy, at least for a short swing trade type of scenario, not necessarily a long-term scenario. And you want to avoid being in crypto when you're seeing these high positive marks, as you can see through several of these price tops over the past year. So Bitcoin here just slightly below, which is good, and Ethereum also slightly below. You can see they both went through this long stretch. This was kind of the time, folks, that you should be profit taking, ideally, when you're seeing a lot of these high spikes. But now that it's low, I think we are in a better position than we've been in for at least the past month and a half or so. All right, let's take a look at a few of the Sandsheets models and exactly what they're showing right now. We see Axie Infinity, lots of shorting. This is pretty normal for this asset. It tends to always see quite a bit of shorting, especially on Binance. Kava is being shorted, and Ontology is being shorted right now. Big long one appears to be XRP. A lot of people expecting that one to rise, which decreases the probability of it rising. So other than that, it's pretty flat. I see one other negative one here, Cosmos, and another one here for Zencash and Tron, just slightly in the shorting range. So any asset that's being shorted, it means there's a higher likelihood of a bigger price rise, especially if those shorts get liquidated. It can essentially be rocket fuel for prices to jump up higher than they would for the rest of the markets. MVRV, yeah, as you would expect, because we've been on this drop for the past month, lots of assets are in the opportunity zone range. A few of them are actually above this dashed line. This is it's going to do a little refresh, but it's significant because it's indicative of the asset being in a top 5% best position in terms of traders being well underwater. And when they're well underwater, it means there's a much higher likelihood of a price rise, especially when they're in that top 5% zone. We'll come back to it after it refreshes. In the meantime, take a look at the top transactions model, where there are actually quite a few big transactions happening today. It had been rather quiet for the past week. These little skinny colored bars represent previous days over the past week, and the big black wide bars represent the current day and any notable transactions. So you can see all of a sudden on Friday, there's a bit of an open window of large transactions happening for several altcoins. Beginning with Ergo, we see a $29.5 million transaction. We can look at the type of transaction for each one. Yellow indicates that it is a non-exchange to non-exchange address. So self-custody wallets exchanging coins there. That's usually a net neutral. DIA data, if we scroll over, yep, another non-exchange to non-exchange. This is the biggest one we see among this Sanjeev's model. It appears that metal has had a $37.5 million move. If we move over, yep, it's another non-exchange to non-exchange transaction. Power Ledger had a big move. And it's also a non-exchange to non-exchange. So those are really the big moves, and they all appear to be kind of net neutral moves. Thankfully, none of them are showing red. That would be a sign of potential sell-off because it's indicative of a whale moving their self-custody coins onto an exchange, which has a very high probability of sending down the price. If we scroll over, let's see if there are any red dots really quick. So far, okay, here's one for Constitution DAO. So let's do a quick test. It happened on May 13th. It's important to keep in mind exactly what Bitcoin was doing on May 13th. So let's go to the main template. May 13th, right here, it was relatively flat. So that's a good test for us. So we can now see if Constitution DAO had a big drop in price on that date or soon after that date. And it did. So this is exactly what I'm talking about. If you were paying attention to this top transactions model and you saw this red square pop up for about $3.1 million, which is a lot for the 279th ranked market cap asset in crypto, you'd be like, well, that's not good. It probably means there's a whale or at least a shark selling off right now. And sure enough, this drop happened probably within hours or on the hour of that big move to exchanges. Obviously, it recovered a bit since, but at least for the short term, that would be a very good alpha signal for you. Let's see if there's any more to do one more test. See if I can go 2 for 2 here. No red, no red. Could be the only red. No, there's one more here. Ocean, $2.6 million. Not quite as big, but it should be enough to tell us something. Happened on May 16th. If we go back to Bitcoin's chart really quick. Yeah, May 16th was a bit choppy, but you know, I see that it was mainly flat. The 17th is when we really saw that decline. So if we look at Ocean, nothing too significant. Yeah, we did see a bit of a drop off, but it wasn't massive. You can see how the transaction volume though exploded on May 16th, likely due to that $2.5 million move. So yeah, the whole point is this can be a really valuable. This model, top transactions, can be a really valuable tool to identify a big sell-off or even a big move from exchanges to non-exchanges, which would be a green square, which I haven't seen any. Here's one, Quark Chain. It's not really a very big one though. This was just 200. I mean, still a massive amount of money, but comparatively, 284,000 isn't that big and may not have enough to move assets. But this would be a sign that coins are moving from exchanges to self-custody, which is a good sign. So you can keep that in mind as well. Storage had a big drop off. Swipe, this one's actually pretty big, 6.2 million, May 15th. Let's just check really quick to see if anything positive happened for Swipe on May 15th. Gary or anyone in the chat, if you know what the ticker is for Swipe, that would be helpful. I think I can find it actually through table here. Is that what it is? Thanks, Gary. Yeah, it just doesn't show up as swipe, but I'm pretty sure you're right on that. May 15th was, after a little bit of chopping, it did have some rise, but not too significant. You see the huge transaction volume spike that correlated with that big move. You can probably even see that the supply and exchanges moved down on that date because of the fact, yeah, but down huge because of the fact that that $6 million plus transaction happened. So check that out, guys. Let me just take off the other so it's easier to see. So this was the effect of that move on May 15th. You can see that the supply and exchanges went from 6.16% down to 1.25%. So like 80% of the supply that was on exchanges was suddenly moved off of it. And yeah, that's a really good sign. I mean, that's a very, very low number showing that Swipe doesn't have a lot of sell-off risk going on right now. Just zoom out to see some perspective on that. I mean, that's a massive drop off. This is probably an all-time low for supply and exchanges. And this is the good kind of all-time low, which indicates that prices may not have much risk of falling off because of it. So anyways, we're about 3/4 of the way past the hour now. Why don't we look at a few questions, assuming there are a few, and dive into a few requested assets, Gary? Sure, we can take a look at Cardano, one of the more popular requested assets on our channel. I'm going to get the on-chain transaction volume back up. All right, ADA. Cardano is still sitting at the 7th spot for market cap rank right now. We'll look at the last 6 months. Let's see what's going on here. So transaction volume, not really showing anything special. It's kind of been declining ever since the top. This was a pretty good top indicator, as was this year. This was kind of the second wave where people were trying to buy that dip and get up, right back up to the year high that we saw. But yeah, trading volume's been declining. Transaction volume's actually kind of on a bit of a rise, interestingly. We definitely see, if I take off trading volume here and draw a line, I mean, yeah, that's definitely a legitimate climb. So it does look like the network is starting to get a bit more active over the past 3 months here. That's a good sign overall. Daily active addresses, not so much. The amount of unique ADA being moved is kind of declining, if anything. We can see the 30-day average moving down there. Circulation looking a little better. It's at least kind of flat at the moment, not so much declining. Now let's move into MVRV. So this actually looks like a pretty decent setup. We're seeing that both the 30-day and the 365-day MVRV is below 0%, just like we saw in a more extreme way back in mid-March before we blasted off. Obviously, market-wide, we saw a good blast off here, but you know, look for both being well below 0% as a good bottom indicator. December, especially for Cardano, was a very good time to buy. The very end of the year. And a lot of, I think Bitcoin, they didn't really take off until like the 4th or 5th. Cardano actually had its bottom like right around the 29th or so of December. And you can see right when the 30-day here, this was its local top here in February, and right when 30-day MVRV went above 0%, that's when we saw the correction. And then when both the red line and yellow line were well below 0%, that was another good buy time. So yeah, they're both in the opportunity zones now, just not to an extreme level like we saw here. So yeah, there could still be some more bleeding until the MVRV starts, both MVRVs get back here. But at least from a probability perspective, this is a better time than average to be in Cardano, according to trader pain versus euphoria. Anything on funding rate of note? Not really. Yeah, it's just kind of flat at the moment. Whale transactions. So we've seen some weird stuff with Cardano, mainly a huge rise in whale transactions. I don't know if these are like routine moves on exchanges or something. It's really hard to say, but you can see how in January, really going all the way back to August of last year through January, we're getting maybe 300 to 500 whale transactions a day. And then ever since early February, we're now getting 1,300, over 2,000 a lot of the time whale transactions. It's starting to slide down a little, but like the perspective is obvious here. There have just been way more $100,000 plus transactions on the ADA network compared to what we were seeing, uh, you know, back in January and earlier. So I'm not quite sure what to make of this. There could just be some strange market manipulation going on, but I'm not seeing a lot of alpha here where like there's a slightly bigger spike and then a drop, maybe a little bit there where the big outliers are leading to further corrections. But yeah, it's bizarre. Cardano's number of addresses happening. I'm seeing that with the price sitting at about 37 cents right now, we can really start at the 100K to a million and million to 10 million Cardano tiers. I still think the yellow one is going to be mostly exchanges. We will leave that off. But let's just, for convenience, merge the 100K all the way up to 10 million. And it looks like the amount of addresses is on a good upswing still, even with this minor drop here in late April. Zoom out to 2020. Yeah, so it was really at its peak in early 2021, fell off significantly, and over the past year or so, it has been on a mild climb, just nothing near recovering to the 30K plus amount of addresses that we saw in early 2021. But let's take a look at the 100K to 10 million tiers in terms of percentage held. And it doesn't even look as good. You can see at least there's a rise in the amount of shark and whale addresses on this top chart, but the percentage held by them has stayed pretty down. They held actually a little over half of the overall supply in early February, but right now it's struggling just to stay above 1/3. Is actually just slightly below 1/3 of the supply held after being above 1/2. So not the most promising sign there. Let's see how much correlation that combined tier line actually has. So yeah, I mean, it does look like this line has some serious significance. Not so much back here. I know they were taking profit from February until July, but even just this minor swing, like this looked like it was some decoupling from the market. If I take off Cardano's price and replace it with the BTC price, so this is now looking at Cardano's price specifically against Bitcoin, it can focus in a little more on the effect of these whales in terms of just Cardano. So yeah, this looks a little better. It looks like, a lot of profit taking happened here, even though yes, they were already sliding down. Profit taking, accumulation right before the bounce. So a lot of people bought this dip, and then they started taking profit again, and the price topped out shortly after. And it's kind of been following this line down ever since. So I think this is a very good line to follow, even if there are some weird anomalies and profit taking too soon in some areas. If you want to follow one indicator on sentiment that would show that Cardano is starting to look a little better, it's probably this 100K to 10 million Cardano shark and whale line showing the percentage of Cardano's overall supply that they hold, which right now is just under 1/3. Let's zoom back into the last 3 months and look at the ratio of transaction volume and profit to loss. Nothing too special here. Yeah, as you'd expect, a little more loss transacting than profit transacting. If we look at about right there, that's the break-even line. So yeah, I mean, let's even do like a week instead. That's going to change the axis. So now 1.0 is right there. It's been just a little below for the last three. It looks like five out of the last 7 weeks. So a little better than usual. If we see some really big low drops like this, that would be a sign that we're near a bottom. But yeah, it's pretty even right now. As far as dormant activity, there actually has been some here in May. Yeah, it does look like some older addresses are starting to move. Whether it's capitulation or not, it's hard to tell. But these drops are not apparent on the Bitcoin and Ethereum network, meaning that Cardano is seeing some movement on its own of some of those old stagnant addresses beginning to either get out of crypto, moving to another address, whatever is happening. This is a positive sign because the mean dollar invested age lines typically move down when there is a bull rally on the horizon, like we saw here in December 2020. Obviously, nothing near there yet, but these little hints can lead to something big if you're paying attention to that line. Realized profit loss, nothing special. It's just tons and tons of negative spikes, which, as you can see, it does kind of limit how much prices can continue to go down when you see negative spike after negative spike. The positive spikes obviously are the ones to watch out for, and you'll see the huge ones obviously when the price is rallying and there's a lot of realized profit going on the network. This would have been a good sign to get the heck out of Cardano because the price wasn't even really moving up much in May of last year, and all of a sudden we have the biggest realized profit spike since the massive one in August 2021. But yeah, these are actually good signs. It means that if nothing else, it's going to be harder for prices to continue dropping for Cardano when there's so many realized losses happening. Nothing really on the social volume or dominance end. We did see a bit of a pickup in March, and it's kind of slowly fallen back down. I think it's mostly negative discourse. If I add weighted sentiment, oh, it's right below, just kidding. So if we see it right here, we had a weird, huge spike in weighted sentiment followed by a drop back down to where it is now, which is mostly negative sentiment. So yeah, it doesn't look like there's anything concerning here, if anything else. And then development activity, right where it normally is for Cardano, it's the third largest asset in crypto in terms of notable GitHub activity per day. So that's a great sign that the Cardano team is still working hard to improve and innovate the asset. And it's actually kind of on a mild rise over the past year. So yeah, good sign for those who are in Cardano for the long term. It does look like the team is still of the belief that the asset can change the world and be a big part of crypto's future. So I think this is a good stopping point. We're just short of an hour right now. We've covered a lot. The sentiment for crypto does appear to be a bit down, which is a good sign. That is a sign that there's fear, uncertainty, doubt in the markets. And that is a recipe for prices to rise. We're within that year mark, as I mentioned, of the next halving for Bitcoin, which is historically a very bullish event. There's certainly no guarantees, but that will be closer and closer on our horizon with each passing week of these shows. And I definitely recommend you guys continue to tune in. Tell other people in your crypto community about Santiment. We are doing a giveaway right now, I want to mention. If you head to our Twitter, you can see that we're doing a raffle. Our team is attending EdCon, happening today, actually, through the 23rd. And the EdCon raffle will give away 3 different Ledger Nano S Pluses, plus 5 Sandbase Pro plans to 5 winners. That's a pretty nice bag right there if you guys are interested in free stuff. And maybe you're not a current Sandbase Pro member, or even if you are and you want to get a few months extra for free, this is a good opportunity. All you got to do is follow us on Twitter if you haven't done so yet, retweet, and like and tag one of your friends in the comments. And generally good things happen. You can see plenty of people doing so in the comments. So there you go. I wish you all a wonderful weekend. Really appreciate everybody being a part of our shows, asking great questions, being part of our Discord. If you don't know how to find any of our links, make sure to go to our Twitter and just go to our link tree. We've got all of our important links right there. And with that said, on behalf of Gary and Balresh and Maxim, who couldn't be with us today, wishing you all the best. Stay safe and